All right, guys, another reaction video, really popular. People really love these reaction videos.
do.
Even in our community here, we ask people, hey, what do you want to see? And people are just like, we love the reaction videos. So here's another one with a man by the name of Patrick Bet David.
You got it.
As in, I was asking Mo, I recognized the guy when I saw him, but every single time I'm like, who the hell is that? And I was like, I've already told you. But every single time I see the picture, I'm like, oh, I know who that guy is. I see him on Instagram.
I love this guy.
Do you?
I love this guy, and he is one of the best interviewers that I've ever seen.
So when I first saw a video of him,
phenomenal questions.
Oh, does he?
I saw him one of the first. I can't remember the first interview I saw, but he did an interview with Ray Dalio, and he asked all the right questions. It was really good.
Okay,
that was a while ago.
You know, it was like when we interviewed Monish, he was very appreciative that we didn't ask questions like, how do you, what's it like knowing Charlie Munger? Like, can you tell us about your process? Exactly. Every single time I've seen this guy on Instagram, I'd always skip past it because he looked like one of those cheesy get-rich-quick guys without watching any of his videos. Yeah. So you got to remember, like, I have not watched any videos. I was going purely based on superficial. This is what the guy looks like. I'm probably wrong. Yeah, remember, I don't watch videos. But if Mo likes him that much, he insists I will like him a lot. Tim, do you know him well? Do you like him? Likes him. Nick?
I like him.
He likes him. Okay. So we're going to... Not love.
You don't love him? I love him.
Okay, so the title of the video I'm seeing is Worse Than 2008, question mark?
All right.
All right, guys, so let's press play here. We're going to go about 4 minutes on the video.
Thinks about what's going on in commercial real estate today. Lenders with less than $250 billion in assets account for 80% of commercial real estate lending. Yet, Goldman Sachs in March of 2023 said our economists assumed that small banks with low share of FDIC-covered deposits reduced new lending by 40%. New lending reduced by 40%. So imagine people are trying to sell.
Oh, I like his watch.
Buyers
He's
cannot
got a
get
collection.
finance. I get a call from a building at $89 million. They dropped the price 2 years ago to $56 million, to $46 million. Then they're about to sell. And the guy that was trying to buy it, Silicon Valley Bank happens. He calls me and says, I can't get financing. Can you come in 40% on the deal with me? And I'm not going 40% on the deal with them because they can't get financing today because banks are not financing today. That's Goldman Sachs. Let me share with you what Morgan Stanley Dean Witter is saying about commercial real estate today. They believe prices could fall as...
So first off, if any bank comes out and gives me some sort of assessment, guess what I do?
Laugh in their face.
I just laugh. Like, I don't care what a bank says. Morgan Stanley says commercial... You might as well put this name up here. Ready? And I need something to be able to write on. You may as well write this. Jim Cramer says, and cross out Morgan Stanley. I don't care what banks say. Banks are businesses that generate fees. They don't care about investing. I am kind of surprised for them to sit there and say this about commercial properties, but they're idiots. Have you ever talked to a banker? Here's the point. If you think your banker is smart, you are probably really, really, really dumb. Your banker is not smart.
Or naive.
Or naive, exactly.
You don't know.
But bankers don't know. I've literally had bankers where they say things to me and I'm like, you're in charge of money. I can't believe you just uttered those words. So let's continue on.
As much as 40%, while nearly $1.5 trillion in debt is due for repayment by the end of...
This means nothing to me. Great, 1.5 trillion. This data alone means nothing to me. Is it 1.5 trillion out of 3 trillion? 30 trillion? 300 trillion? How much is this? I don't care what this is. Mo, is this a lot of money? Yeah, it's a lot of money. But how do you know how do you know how much it is?
It's the same thing as when they say that China owns our debt, and you look at it and you're like, oh, they own barely $1 trillion out of 30-some trillion.
I don't know how much they own, but is that
it's something like that? And it's like, well, China owns our debt.
Well,
really?
They probably sit there and say they're the largest holder. Oh, okay.
Cool. I mean, cool.
Sick.
Somebody's got to be the largest holder.
Just like when they say China's economy is going to overtake ours number in the world. Yeah, in terms of total dollars, but they have 5 times more people than us. Mm-hmm. All right, let's keep going.
2025. Here's what John Kirshner, the head of U.S. Securitized Products at Janus Henderson Investors said. He says, what we're doing is being patient, staying away from all but obvious trade.
Okay. Hey, Johnny boy, where were you when rates were really low? Where were you when all this was... why am I getting upset? I'm getting upset because these idiots all come out after the fact, and when you do it ahead of time saying, wait a second, shouldn't you be careful? Oh, well, no, this is... Paul, you're just a fudster. No, I just realized that 0% rates aren't going to be good in the future. It's all great and dandy to come out later and say, oh, we're really scared now. We're really scared. We're really scared. What were you doing making these decisions before? You know, back in 2010, after I bought a bunch of single-family homes, I went to all these banks who'd given loans on these homes and said, hey, I want a mortgage. They said, yeah, I'm not going to give you a mortgage. Why? Well, we didn't do well in our real estate portfolio. So you idiots that lent $150,000 in a house that I bought for 10 and put 30 into won't give me a loan for 30,000? Correct. Oh, so 5 years ago, $150,000 loan was fine.
No problem.
Today, $30,000 on the same house that's rehabbed and rented is not good. Okay, noted. Thank you.
And then just waiting for the distress to come to us because it will happen. Meaning they're going to come to them saying, hey, can you please buy this building from us on 20 cents on the dollar, 30 cents?
That is true. Now, I don't know if it's going to be 20 or 30% on the dollar.
I was like, what can you possibly say here that agree with him?
Listen, how do I put this delicately? We're starting to see cracks in the commercial real estate market. Yep. I told a story with Mo yesterday, my partners yesterday, about something and somebody that happened recently. And I was thinking to myself, I'm not the buyer at this point, but I will be a buyer at some point. The fact that I'm starting to see the crack. And guess what? I've seen cracks in the past that end up 0% interest came in and boom, those cracks went away. Right. So who knows if it's really going to happen. But when you start seeing distress happening and it's starting to...
Especially now. Like we were talking about at lunch. It's really not that bad out there yet. But imagine when it does get worse.
Listen.
It could.
All it takes the government doing is saying, hey, we're backing all commercial mortgages. Yep. Done. Yep. Problem solved. You know what everybody say? See, Paul, I'm like, yeah, you have to rely on the government literally giving 0% interest. Mm-hmm. Let's keep going.
Cents on a dollar, 40 cents on a dollar, and even Charlie Munger believes commercial real estate market is in trouble today. So these are not regular people we're talking about. By the way, look at CBRE. They're in the commercial real estate business. Look at the chart they're showing right now on what's going on with commercial real estate. This is the vacancy rate on downtown offices from 2007 till 2022. You see that number right there? It is up at 17.6% the last 3 months of 2022. It is the highest it's been since 2007. It's including 2008 and 2009. Look at the peak of 2010 versus today. That was 13.8%. It's at 17.6%. Since 2021, office loans in delinquency have increased, ready, 44%. That's a big number.
That is a big number. But again, was it 0.1% before, and now it's 0.144%? Like, what is the number relative to history? That's what I need to understand. This tells me nothing. Not nothing, but it doesn't tell me enough, I should say. If we're at historical lows still, then okay, we're still at historical lows. I'll start getting concerned when we were before at a higher level and it increased 44%. Whoa.
Yeah.
This is a big jump. Don't get me wrong. I'm not trying to say it's not a big jump. But remember, guys, data, it can always be manipulated to make it sound worse than it actually is, right? My delinquencies increased an infinite number in the last month. Why? Because I forgot to pay one bill. If I didn't pay one bill, I haven't forgotten to pay a bill in 15 years. So you can't sit there and say that it's a reasonable expectation. Oh, I forgot to pay my electric bill. By the way, I'm making that up totally. My electric bill gets pulled out of my account on purpose because if it wasn't, I would forget.
And you would be delinquent.
I would be delinquent.
And by the way, this problem's even worse in big cities, New York, Chicago, San Francisco, big cities in California. It's even worse. Matter of fact, Brookfield, that is a $500 billion company. They have money. This company just bought one of the insurance companies I do business with for roughly $4 billion. Here's what they did. They are the largest office owner in downtown LA, and they recently chose to default on loans on 2 buildings rather than refinance the debt due to weak demand for office space. It's a $500 billion company, a lot of money, a lot of assets. They choose to default. They don't even want to refinance because no one's trying to lease more office space from them. On top of that, I'm not dumping on San Francisco, but obviously,
I am.
We're dumping on San Francisco. Literally, I hate San Francisco. I literally hate every aspect of San Francisco. Every single aspect of San Francisco, I hate. This is a complete shot at San Francisco. If you are butthurt by that, turn off the video. I don't care. San Francisco is the worst city in the world. You just overtook Boston from my ranks of the worst city in the world.
The bums are also dumping on San Francisco.
Let's keep going.
Bad policies cause people to leave. Remember how I showed you that picture about the $300 million building in San Francisco?
60 million now.
80% discount.
Yeah.
You ready for this number? 30% of San Francisco.
I actually told Andrew the other day, yesterday,
Go look at it.
I was like, let's go start looking at office
Yeah.
space in California.
Yeah.
He goes, really? I'm like, Andrew, I said to him, hey, vacancies are, I said 35%.
Mm-hmm.
I go, vacancies are 30%. Just 3 years ago, you see this number? This is 10, this is 0. This is about 4%.
Yep.
Right there, 600% increase. 600% plus increase. Now you have the understanding of that data. Remember what I said before? If I just said to you 600%, I'd be like, well, if it's 0.1 and it went to 0.7, by the way, that's the proper percentage increase. Looking at going, okay, that's a big pet peeve of mine, by the way. So I want everybody to understand, going from 1 to 7 is a 600% increase, not a 700%. Because 1 to 2 is 1, 2 to 3 is 2, all the way up. So it's 7 minus 1 divided by 1. 600%. Just let everybody know that if something goes up 7 times, it's a 600% increase. You take that some number of times minus 1. Welcome.
Francisco's office space is vacant today. Ready? 7 times the pre-pandemic percentage. You see that chart right there? Where it was in 2018 to where it's at today, people are not leasing office space in San Francisco today. They're taking a massive hit. This is a reality. This is not some.
I love his watch. That's the only.
stats. So
He's got the blue face too.
How about nationwide? Is this really affecting everything? Do you know what is the biggest banking lending drop in the history of U.S.? March of 2023. The previous 3 were 2001 dot-com bubble, 2008 great financial crisis, 2020 COVID, and then it's now, you know what the dollar amount is? A record $104.7 billion in the last 2 weeks of March is.
So what I want to see is that number as a percentage.
Because there's more money out there.
Yes. By the way, there is more money. It's still a big number. The question is how much of that is a percent.
Yeah.
So here it is. So U.S. bank lending drops dramatically. Bank lending fell by a record of $104 billion last 2 weeks. When you say bank, so total number of loans going out, is that what they're saying? Oh, right here. So here it is. Here's that big drop. And this is as a percentage of total dollars. Well, this actually looks worse as a percentage. This actually looks way worse. Because right here, it's 6 trillion with almost the same drop. Right here is 4 trillion with almost the same drop. So as a percentage, guys, it's, again, data can be manipulated. This is still bad. Do not get me wrong. I wish I had like a ruler to go across. Because this looks like bigger percentages here as a percentage of all loans. All right, still bad. Don't get me wrong, still bad. And it's worse than COVID. Isn't that funny, Mo?
Yeah.
Look at that. That's COVID right there. Oh boy, let's keep going. Got about 40 seconds left.
How much bank lending dropped? Banks are not lending because money market is getting all the money today, and banks don't have the money enough to be able to lend the way they were doing pre. They need money, and people are taking the money out of these.
So I actually disagree. I don't think it's the banks. I think it's the borrowers. Like, borrowers can't justify it based on, I think banks always want to lend. But the problem is when rates go from 0% to 5.25%, they got to lend at what rates in order to make money.
Right.
Right?
Yeah.
So if you're going to lend out, if you had a property that was at 3.5% interest, and all of a sudden now you want to buy a new property at 6% interest, 5.5% interest, you're going to make a lot more money on that property, which means it might have to fall in value a little bit. So the demand is probably dried up. I don't think it's the banks. I think it's just the borrowers.
These banks, especially with what happened with Silicon Valley Bank and First Republic and all these other places, it's even getting worse. So commercial real estate folks, they own those properties. I hope you got a lot of cash. And if you have a lot of cash and you want to go into commercial real estate, the next 6, 12 months, 24 months, maybe 30 months, is going to be a pretty good season to get into it. And by the way, we got more pages.
So I do like the fact that he said, like, hey, during bad times, you're going to make money.
Right.
That's what I like about that. Not this thing of like, oh
it's
boy.
flossing.
Yeah. I mean, I don't know what he was saying back when it was flossing.
But
I can give you more data. I think you got the point on what's going on today. Here's the reality of it. Question, Pat, are you buying commercial real estate properties right now? I am. I bought 2. I'm about to buy another one. I'm making an offer on the 4th one. Few are in auctions. The auction one I'm going to buy on literally pennies.
No, auctions are terrible. Actually, I don't believe you can get good deals at auctions. I absolutely do not believe you can get a good deal at auction. I don't believe the pennies on the dollar thing. You might be pennies on the previous dollars, but I don't think it's good value.
On a dollar, and I'm buying that one.
I've been in many auctions in my life. I've never seen anybody steal a property.
Really?
Later on, I've been like, okay, I bought properties from auctions. I never thought to myself, man, I really killed it. And I bought an auction at literally the bottom of the real estate crash in 2008. I bought a piece of land and I made like 6% of the deal. literally 6% of the deal. When I say 6% annualized over like so it sounds like a lot of money. I made like 65% gain over 10 years, but it's annualized. It's like high fives. It was terrible.
20-30% of what it was actually worth 3 years ago. And I'm going to get into it, but I'm doing it because I'm operating. I'm not doing it because I'm leasing it out. Now, some are saying, well, Pat, should I buy some commercial real estate? Is it going to be a good time to buy?
Oh, we're past our time. Let's see what he says.
If there is one type of commercial real estate that the value is not moving, is industrial space, because warehouse.
Well, that's been a hot area for a while now.
Yeah.
Industrial space. It's been very hot for the last few years. All right,
So
I'd have to see more. I want to see more about like, this is clearly a video made to like get a reaction, which I'm fine with. Everybody does it. But I look at it going, okay, he didn't really say anything that I thought was novel. You know what I mean? He just, I look at it going, I'm not like wowed, but I'm not, like, okay, this guy's an idiot. You know what I mean?
He has a lot of video. I've never really watched these ones before. Mostly his podcast. He has a podcast.
So what does he do? What does he do for money? Like, how does he make money?
Now he has this Valuetainment entertainment center on YouTube. I mean,
4.2 million
yeah,
subscribers.
They're huge, right? And then I guess he does some real estate. I believe he's an immigrant from Iran. That's correct? Yeah.
So he's my neighbor.
Yeah.
I'm an immigrant from Iraq. All right, guys, thanks very much. Subscribe to the channel. If you know somebody who's a big Pat Bet David fan, please send them send them this video so they can take a look. Like I said, I don't know enough about him to really make a comment. He didn't say anything egregious, so I'm happy about that. And I like the fact that he said if you're buying commercial real estate, the next 6, 12, 24, 30 months, whatever, should be pretty good for you. Thanks, guys. Take care.